across the technicals though with Tony Sycamore from IG, who joins me now. So a very choppy session on Wall Street. US stocks sort of reversing some of their earlier gains and then closing in the red yet again.
Yeah, they did. There was a extremely volatile session. We're seeing a lot of this over the past 4 days, really since the Liberation Day tariffs. And the sell-off was justified after the White House confirmed that those tariffs are going ahead, including the 104% tariff on China at midnight tonight, which is 2 p.m. our time. So 3 hours away, we have potentially the two largest military and economic superpowers about to collide at high impact. And here in Australia, we're caught squarely in the middle. So it's not particularly a great situation, has the potential to dwarf the impact of the GFC and COVID. So dire consequences will follow if this does continue as it is at this point of time.
All right, so let's tell us what the charts show us, because you're saying if the NASDAQ 100 was to accelerate below its support level, then we could quite see a big drop lower.
Well, in times of uncertainty, the charts are all we have to lean on, Jules. And this is telling us a very interesting story here. The acceleration lower. To me, I like to use Elliott wave, and this just reeks of a third wave lower. It's acceleration. We're seeing that in terms of the down move from that March high there. And I suspect we're probably not far away from seeing another low before a corrective bounce. But things, as I mentioned, don't look particularly great. And if we continue along this line, any bounces should be viewed as counter trend or corrective rallies. So if the NASDAQ was to get back up towards 18,500 over the next week or two, potentially as some of the news starts to die down a little bit, then I think that's a wonderful selling opportunity. But to really get a more positive bias in place, I've got to see the NASDAQ get back above that low we saw around 19,152, which is quite a long way from where we sit at this point of time.
Now, the decline in oil has been extraordinary. President Trump did say he'd bring down fuel prices, but it's really about global demand, isn't it, if we have these recession fears?
Absolutely. I mean, as we said, the economic consequences of what we could see are dire. And no one's showing any signs of budging, which is just a recipe for disaster. And that high you can see there at 72, 78, or 28 was when we were chatting last Wednesday. And since then, it's free fallen 20%. For good reason. Gone through very important weekly support in the mid-60s. And while it holds below those mid-60s, Jules, I think it remains very vulnerable to a deeper decline, probably down to $52, $50 type area.
All right, let's talk about our market. Back in the red today, but there was a nice bounce yesterday, and that was mainly on what we heard from Chinese authorities. As you say, we're very much going to be caught in the crosshairs here.
Yeah, that's right. And China now, if assuming things do go the way they are looking, it's going to be up to Chinese authorities to stimulate their economy, which was good for the mining stocks, and potentially devalue their currency, which we're seeing signs of as well. But very similar to the US equity markets, we've seen acceleration lower since those Liberation Day announcements. At this point of time, it doesn't look anywhere near as severe as what we're seeing in the NASDAQ. The decline has been far more modest. So I'm hopeful that we can hold above 7,100-ish in the coming sessions. But look, it just depends how long that tariff rate stays at that very high level. Because if it does look like we're in for the long haul there, then the ASX 200's got another leg lower as well, unfortunately, which will reflect the impact of these two superpowers colliding.
And what does all this mean as well for our currency? And could we test the pandemic lows?
Yeah, absolutely. I mean, the risks are all to the downside here. As we mentioned, this is just a horrible backdrop for the Australian economy, for the Australian dollar, for the ASX 200. And the Aussie dollar's got to respond to that in terms of, move down towards that 55.09 COVID crash low. There's also a concern now that if we do see these tariffs start to lock in at these high levels, particularly between Australia and between the US and China, we're going to see a liquidity crunch. We're going to see money being sucked out of markets. We're already seeing it in some respects. Credit spreads are widening, etc. Yields moving around quite significantly. There's a real dislocation starting to appear in markets. And if we do get a liquidity crunch, the safe haven remains the US dollar, and that is not a good situation for the Aussie dollar either.
Okay, what are we seeing in crypto? Is that somewhere people are hiding?
Well, it's been largely sidelined, which is interesting. And I suspect that's because a lot of holders of Bitcoin are probably in for the long haul. They're not too fazed by what's going on. In fact, they're probably looking at Bitcoin in a more favorable light given the events which we are seeing. But look, the decline from that Jan 20 high still looks very corrective to me. But the correction isn't complete. We saw a fresh low this week. It's got to get back above the 200-day moving average, which is the orange line, and then it's got to get above those double highs we saw there around 89,000. And that would confirm the correction is complete and that potentially it's going to take another leg higher. But the backdrop in terms of risk sentiment isn't particularly supportive of that occurring at this point of time. So while we remain below that 89,000 to 90,000 area, then you just need to allow for this pullback in Bitcoin to continue.